Well, David, the all share up 0.4% odd, but gold shares down a little bit and financials up again. So it's this reverse that plays out every day.
It's all over the place. It was very difficult to find a clear direction. Even though resources were down, for example, there was still quite a number of features within the resource index. But look, I'm pleased that it went up. I don't think there was a great amount of news today to guide investors, and still against that non-news, the market found support. I think there was just a slightly better feeling in the market for whatever reason. I thought against the motor vehicle sales that we'd find retailers coming down and the industrial market under a bit of pressure, and yet it found support. Buyers came in on the retailer side. Maybe now starting to reflect that there'll be more aggressive rate reductions than originally proposed.
I was going to ask you, is that what people are looking ahead to?
I think so. I think that if you looked at the report on motor vehicle sales, I think the outlook is pretty dismal this year. Last year, overall, motor vehicle sales were down about 21%. They're expecting another 6% reduction this year, and also a reduction in export sales as well. So right across the board, not a very pretty sight. So I think against that, expect more rate reduction.
As you said, not a lot of news out, and the news that was out was in the smaller companies sections, but a lot of withdrawals of cautionaries. Do you think we're going to see more of this sort of thing as people struggle to find common grounds to do deals?
Probably. I thought there'd be more deals. I thought that this is a time to be aggressive, to do consolidation. But I suppose there's also the money aspect of, banks are not that eager to lend out to finance these deals, not knowing how these companies are going to operate. I was looking at Hudayco's results, which came out on Friday, and they're not prepared to give guidance. They're not prepared to give any forecast on how the rest of the year will unfold. So I think against that, it could be pretty difficult to do deals. But if you look overseas, someone like UBS is snapping up brokers and trying to reposition themselves in this kind of market where people feel very vulnerable.
Government bonds are attracting a lot of attention at the moment. The yield or the sale of the 5-year bond attracting a lot of attention. I suppose people are expecting interest rate to come down now.
They are. There was a bit of a knee-jerk reaction today with the inflation number. I think the market was expecting inflation to come down further, not the 0.9 that South Africa released today. I think they were expecting 2-3%, so it did kick up. But also, I think in this market, investors looking for safety of capital. And they're even prepared to give up yield, even though the net yield after tax might be below inflation, and therefore, you're flat. But I still think that investors are more keen on safety than anything else.
Internationally, investment banks cutting bonuses. I suppose it was only a matter of time before they actually announced
I think that's a story that you can't believe. I know they made promises, but where a bank writes off billions,
and retrenches thousands of people.
Sure, it's really perverse to pay bonuses of the nature. I don't know whether those are negotiated bonuses and whether they're part of contracts, but I think that from now on you're going to see much more conservative outlook in the banking industry. I think kids are not going to go into hedge funds anymore. They're going to become doctors and lawyers and engineers.
Which is a cycle in some respects.
It is.
Well. I suppose there's more work for engineers in the US.
At least you got a job. You can go tick books. You can become an accountant, but at least you got a job. It's better than a lot of the bankers. And the news coming out of London at the moment is really abysmal. It's a city that is gripped by gloom. A huge number of bankers, chaps who worked in banks in fancy positions, just hanging around, without income. You could start a blog, and a website, I think.
Which is what I suppose a lot of people are doing. But I suppose the other point about London is that it was built on financial services, and it decided a couple of years ago that that's what it was going to focus on.
Well, London was the international center of finance, where America is still pretty much, even though America's bigger, it's still pretty much American. It's very parochial, very focused on America, whereas London, if you went to London, you didn't speak English. Everybody who was there spoke a foreign language. They spoke English, but in a foreign accent. And it was the center of, drove the British economy. It drove the city of London. And as with a downturn, you're going to find a lot of services there. You're going to find a lot of people returning to their home countries as well. So, and it's a country in deep recession. That's why Jim Rogers says, pull out of the UK, sell sterling.